Over the last 2 to 3 days, the US stock market has dropped by 2 to 3%. Without going into the politics of new tensions, let's keep our investors' hat on and simply zoom out, looking at this intermediate cycle that started in March. As the stock market is recently becoming precarious, if tensions do continue for a while, hopefully not for long, there is a chance that this intermediate cycle didn't actually finish in early October, and instead it might continue for another short while. After all, while usually these intermediate cycles in the general stock market last for around half a year, several, 1, 2, 3, 4 of the previous intermediate cycles were quite a bit shorter than usual. When we see a situation like that, often an extended intermediate cycle follows, bringing the average back to the typical duration of around half a year. Plus, looking at the RSI, we might see one more confirmation of this intermediate cycle low, perhaps with a bit of a positive divergence in RSI, where price shows us lower lows versus RSI's higher lows, which usually is one more sign of an impending turnaround in momentum. In this case, a turnaround from the downward momentum to an upward momentum into a new intermediate cycle. So with this new precariousness in the stock markets, perhaps it's prudent to exercise caution, have some relatively tight stop losses, and that's exactly what we're going to do together with the members at myfinanceteacher.org. As the model portfolio shows, I entered into the market in SPY as well as QQQ over here on the 28th of September on SPY and on the 6th of October on QQQ. By now though, with this weakness over the last several days, the markets are near our break-even zone, and unless we see strength as the markets open in the US in the next several hours, it wouldn't be a bad idea to reduce your positions or set in relatively strict stop losses. After all, while we are pretty close to an intermediate cycle low with this optimism index dropping all the way down to slightly below 30 back at the end of September, early October, as I mentioned, there is perhaps a chance of a bit of an undercut below this 200-day moving average, below the lower lows, scare everyone out of the markets, create a higher low on RSI, as well as a higher low on this optimism index before turning around up into a new intermediate cycle.